Hello, welcome to Scale by Design. I'm your host, James Mackey. We have a really exciting episode for you today. We are joined by Mark Sherman. Mark, thank you for joining us. How are you doing?
James, great to connect with you, and really looking forward to today.
Yeah, let's do it. So before we jump into the topics we have outlined, could you provide just a quick introduction on yourself and your firm and what you're up to?
Yeah, sure. So the firm's easy. We've been around for 11 years. We have $1 billion of assets under management. We focused on extraordinary founders and providing them with investment and revenue services to help them grow and scale their businesses. Typically, we're investing in companies that are somewhere between around $1 and $10 million in revenue, focused on AI, digital, and software businesses that are in high states of transformation. And we're trying to help them get to $100 million and beyond. And so that's for the high level. The thing that's different about us is we help about half of our companies generate revenue. So we've generated about $500 million for about half of our 90 investments. And we've worked with companies like Auth0 and Box and BigCommerce and CrowdStrike and DocuSign and GitLab and sort of on down the list, which have worked out really well for us. And then in terms of me personally, I joined Telstra Ventures in 2012, so I've been doing it for 11 years. And prior to that, I was a general partner at Battery Ventures for a decade. And then before that, I was a tech banker. I ran the software business of a company called Roberts and Stevens back in the early, mid, and late 1990s. So that's a quick version of Telstra Ventures and a little bit of background on me.
I love it. And it looks like you've been on a board member on a fair amount of companies that I'm familiar with, including Coupa, which is pretty
Yeah,
cool.
yeah, exactly. Led the Series B in Coupa when it was about $20 million in terms of valuation, and it's being taken private now at $8 billion. So it's been quite a ride, and it's a great testament to Rob Bernstein, the CEO, and then all the team at Coupa that have built a really amazing company.
Yeah, that's a really cool journey. Quite an explosive growth curve, right?
Absolutely.
So let's jump into the first topic. I think we want to start with a overview of the market and VC trends that you're seeing in 2023. So where would you like to jump off specifically there?
Well, why don't we talk a little bit about, kind of some sectors that we like, and then some trends in just the overall financing market. And so on the sector side, historically, we've been all over the cloud ecosystem, the cyber ecosystem, SaaS, next generation communications, consumer. And those are, areas that we will continue to see great investments because they have just massive gale force winds of the transformation of IT and digital behind them. If I was to kind of call out a couple of more that, we're seeing really perk up, I'd probably put some emphasis around artificial intelligence, climate tech, and then I think I probably double down on cyber just because it's so much. And so on AI, I think everyone's been playing around with Chat GPT, and that sort of creates a very personal user experience that my wife was using to brainstorm some writing that she was doing just last night. And my son has played around with it with a bunch of his buddies, and we do it in terms of answering email correspondence and whatnot. But I think it speaks to multi-decades long trends of AI technology that has been bubbling forth. And we basically are seeing almost all of our portfolio companies on the marketing side at a bare minimum, and then in their core software offering in many of these companies. And so we just see AI as being just kind of a fundamental trend that has been happening for decades, but I think it's received just a new catalyst and a new life. And so that would be one. The next one I'd probably talk about is climate. And, barely a day goes by without you seeing some major article on climate change and how important it is. We're seeing that getting packaged and positioned in the software industry, and just made an investment in a company called Open Solar in Q4 that is up to, over 20% of all residential solar plans and implementations and customer experiences in the United States are being managed by Open Solar, and we have high hopes for this company because the rollout of solar in the US and the residential ecosystem will just be a monster trend for the next decade or so. And then last but not least, cybersecurity, kind of like climate tech, every day there's a story about climate tech, every day there's a story about cybersecurity. Because, if data is the new gold or oil, cyber is what you need to protect these assets. And we just see tons of different trends in each of those. So let me just sort of pause there. That's kind of what we're seeing on the sector side. James, does that make sense to you?
It does. To dive a little bit into AI, and generative AI, what we're seeing with like ChatGPT, how much of an impact do you think this is really going to have? I know you mentioned like revenue teams, right, or marketing. Do you feel like this is going to enable revenue orgs to run leaner shops where they might have like fewer content writers or potentially SDRs? Like, do you think it's what we're ultimately going to see is a decrease in headcount as a result of there's obviously other automation technology coming out, but as a result of tools like ChatGPT, I'm curious to hear your thoughts on the impact over the next few years on what that might do for workforce planning and how many folks are in these departments.
Yeah, I think in the end, Chat GPT is going to have, and generative AI more broadly, I think will have big implications for marketing organizations. And I think that, like many technologies, there's an argument that it may rationalize some headcount. But what tends to happen is that headcount gets redeployed in terms of other activities that are, less automatable. And so, well, I think that you may get some rationalization out of your content writers or out of your search engine optimizers or what have you. My guess is that people don't get fired in mass, but people take on more and more responsibility and now have kind of an AI automation angle to what they're doing, so they can kind of get twice the work done with just the same number of headcounts that they have. So I would be shocked if there's going to be massive upending in terms of marketing, because I think there's always creativity and always new ideas for campaigns and content and what have you that you're always going to need. But I think the additional headcount that people will need will get rationalized a little bit.
Right. And it's interesting. I'm curious to see how much of content is actually going to be written by generative AI versus people moving forward. Like, you're starting to hear stories of people, like, for instance, even on like LinkedIn content, people basically asking ChatGPT to spit out a bunch of different content pieces. I'm not doing that. I write a lot of content on LinkedIn. I haven't. I mean, maybe I should take a look at it and just like see how good it is, but I have a feeling that it wouldn't have the nuance and value that I would be able to put it. I would have to put so much time figuring out how to phrase all the keywords into the post into ChatGPT that I might as well just write it myself anyways if I can get it to that point. So that'll be kind of curious to see, like, how much people truly do outsource a lot of their writing to the platform. I think it's probably going to happen to some extent, but I think for chatbots, things of that nature, it makes a ton of sense. And it's just going to be, I'm curious to see where the point of impact and how much of written communication is actually going to go to ChatGPT versus be written by actual humans, right?
Yeah, and I think a lot of it, James, matters around how much you care about the output of the content. And so to your point, it sounds like when you write on LinkedIn, you care a lot about, the authenticity of what you're saying. And I do too. And so I think I may not use it in terms of the output being used. But I know, like, personally, one of the things I like it for is when you have a little bit of writer's block and your
Smart.
colleague or your wife or your whoever you like, your writing muse is not there. It's a really good tool to just put in a really good prompt, and you get a response. And just like when you're brainstorming with a buddy, sometimes that buddy is off base, but it helps you to refine your thinking to say, James didn't give me what I'm wanting, but this is what I really want. And it helps you to just kind of refine your thinking process.
I'm going to start doing that. I did not think to leverage it in that way. I think that's a great insight.
Yeah. Well, it's interesting, my son I should preface this by saying he's applying to college, got all of his applications into college and whatnot. But in December, he and a buddy were just kind of playing around with it, and they both crew, and they said, write a college essay that about how rowing changed my life, which is not an essay that he wrote to any of the schools. So let me preface this by saying it, but he said what they came back with was actually, very good. And so, I think it's going to change application process. I think it's going to change schools, pretty significantly, because I think they want authentic content, and preventing against that and putting up some guardrails around that, I think will be pretty critical.
Right. I mean, we don't want to lose the skill of critical thinking and
Totally. Yeah.
putting
And I
together.
think brainstorming good, critical thinking, maybe not so good.
Yeah, I think and that's for education system. It's gonna apply a lot of pressure, and schools are gonna have to think about how to protect against that.
Yeah.
I just think it's so critical to be able to think through putting together, a lot of writing is about putting together premises that lead to a logical conclusion and putting that together in a persuasive way. And that's such an important skill set to move up strategically in your career. If you want to get above, entry level roles, you have to be able to think, and you have to be able to, come to analytical decisions, and you have to know how to present those decisions to other people and influence them and get buy-in. And to me, that's really the one of the main value adds of writing and putting together these essays and these types of things. And I don't know if that's necessarily like how a lot of folks see it, but for me, that's how I see the writing process and why it's so critical for people coming up. So yeah,
Totally.
I don't know what they're
Good
going to
writing
be.
is good thinking.
Exactly. And so
Yeah.
how do we, I guess like they're just going to have to write, everybody's going to have to write their essays like in a classroom. We're going to have to go, we're not going to be able to do the fully remote culture. We're going to have to go old
You're
school
gonna
and
have
get
to
back
get
in a room.
the blue books out with pencils.
Yeah. Yeah. We got to, full circle, right?
Exactly.
Well, so climate tech, I really find it fascinating. Climate tech, health tech. I just love how everything just seems to be becoming an engineering problem. It's no longer like this segmentation of biology, for instance, and tech. It's all just one big thing
Converging.
now. Right. And
Yeah,
it's, I think like,
exactly. And I kind of think that that's the key point, which is if you look at the market cap of the S&P 500, it's about 25% IT oriented. And if you look at the amount of venture dollars that are going into IT oriented things, it's about 50%. And I think, just to your point, there's going to be just continued convergence in terms of, the IT side infecting, for lack of a better way of putting it, almost in every industry known to mankind, which is why we're so optimistic about investing in AI, digitization, software, any of those things that, relate to those trends. We just see, another multi-decades long trend towards that continuing to be.
yeah, and I'm almost curious if it's, for the following generations, if we look forward 30 years, I mean, is the concept of the tech industry really even going to exist? Because every industry is going to be tech, right? And it's
Yeah.
how we view it today, I feel like is going to be drastically different than, and we might even be viewing it today the way it was really 10 years ago. Maybe the idea of the tech industry is already sort of disappearing, but I think into the future, I don't know if we're even going to refer to it as a separate segment. It's going to be everything, right?
Well, I think when you have Goldman Sachs referring to itself as a software company, you know that it's going to pervade pretty much everything known to mankind. Because, and the argument that they're making is they have thousands of software engineers on their team, and it's probably one of the more important employee bases that the company has. Yet we still kind of think of them as a bank, and they are, and are regulated like a bank, and execute things like a bank, but the interesting side of Goldman and the interesting side of a lot of these, established franchises, what are they doing on the IT and software and AI and digitization side?
Yeah, very interesting. And follow-up question on climate tech, big space, right? Like there's
Yeah.
just so many different applications. You mentioned solar. What specific, so it sounds like solar, you see a lot of potential. What specific areas within climate tech are you going to be looking at over the next 5 years?
Yeah, so there are a bunch of things. So the penetration of renewables is just fundamental and will continue to play out over the next, couple of decades. And software to help in that penetration, I think we just think is very interesting. And so this company, Open Solar, that I mentioned really quickly earlier, basically, provides quoting, estimating, planning, and then light CRM capabilities to contractors that deploy solar panels. And so
Hmm.
we just see that trend continuing to play out, in a very significant way over the next couple of years. Another area that we like a lot is the power purchase agreement area, where you have renewable players on one side, and then you have large enterprise players that are buying energy from the renewable people on the other. And power purchase agreements are the software that sits in the middle that basically helps the two sides to essentially negotiate long-term contracts and pricing between each other. So the renewables folks gets long-term certainty, and then the enterprise guys gets long-term pricing lock-in. So they can plan, so both sides of the equation can plan. And then we're just seeing anything that can help enterprises, being buildings, commercial real estate, manage their energy assets better. We just think is going to be a continued, long-term space, for the next couple of decades. So we're just looking for any sort of software adaptation in terms of the management of energy and climate.
Yeah, I think and I've heard that there are some more so established companies, a lot of startups coming up when it comes to energy efficiency and plugging in. I don't even know if it's like a combination of IoT and software to manage buildings and things of that nature to essentially cut costs down and resources. So
Yeah,
how
and,
far
and
along are
everything along that. So like, HVAC, lighting systems, sunlight, daylight harvesting, all those things that feed into large commercial real estate systems to help them manage their energy footprint better, I just think is going to be more and more valuable over the next 10 years.
right? And I mean, are there any companies like doing that really well right now? I mean, I know we've seen startups try to do that. Some of the startups I've seen, quite honestly, not so successfully. I think it's a difficult product to build it, at least unless you're trying to be very siloed within one specific niche, if you will, solution. So what is I mean, how mature is that space right now?
Yeah, so I think that, your questions are good ones, and ones that we struggle with as well, which is there's lots of different systems and there's lots of different proprietary interfaces. The good news is those interfaces are starting to standardize more and more. And as they do, I think they'll create opportunities for systems to manage that energy footprint better. But you've kind of highlighted the major issue with that space. And, we're still looking for folks that can solve that challenge well. And if, I just sort of put it out there into the podcast galaxy. If folks have interesting systems around that, we're just looking for anything that helps manage energy better, through software and through AI.
I love it. And so jumping into the third segment, I want to make sure that we have time to cover cyber as well.
Sure.
I cyber, I always, I mean, cyber is going to be a growing industry for a very long time, if not somewhat indefinitely, right? Because there's always
Yeah.
going to be a need to further sophistication surrounding protecting systems and whatnot. I'm curious. I mean, some of the big cyber companies are still going through significant layoffs this year,
Mhm.
and I haven't looked into earnings reports and the financials behind that. I suppose it's possible financials are still very strong for these publicly traded cyber companies, but they're using this as an opportunity to slow down, focus on operations, make sure their P&L is where it needs to be, their employee expenses are in the right areas, drive growth. How much, I mean, do you feel like a lot of these cyber companies, are they being negatively impacted by capital market constrictions that we're starting to potentially see right now in tech? Or do you think that they're independent of that? And if so, like, what do you think is going on in cyber right now? I suppose simplify my question is like, how is the current market impacting cyber companies right now?
Yeah, so I would just say overall, not even just specific with cyber, but I think everyone is watching in the inflation progression and the interest rate progression very carefully. And I would say almost all of our portfolio companies are looking at their financial plans on a quarterly basis, knowing what's going on in the macro with a much higher trigger finger than I think I've ever seen them look at the macro environment before. And I think cyber companies are just as susceptible to that. Whereas I think in general, some of the general startups that, may have maybe more of a vitamin than a painkiller, maybe looking to trim fat a little bit more aggressively. I think that cyber in general fits into more of a painkiller category. And so I think some of the trimming that we've seen some of the cyber companies do is a little bit more measured. And I think, to be open, we've been kind of encouraging all of our companies to use this time very carefully to, trim, underperformers, to look at customer profitability. And sometimes, a customer that you did for XYZ reason 3 years ago may not necessarily hold true today, and it's unprofitable, and you may want to, focus on the ones that you have. But I think it's a time where people want to be very careful with their cash, very careful with their burn rates. And so, selective trimming is probably, a smart thing to do in this environment.
I think so. It's hard to see established cyber companies really falling into serious trouble because, as you said, it's a painkiller. So
it's totally a painkiller.
Yeah.
And, in the end, whatever analogy works for you, data is the new gold, data is the new oil. And this is sort of the bank or the safety deposit box that you're wrapping around it. I think you just have to have more and more valuable assets protecting yourself in this environment.
I love it. And so Mark, we are coming up on time here. So I think this is probably a good stopping point. I've really enjoyed this conversation. It's been very valuable to get your insights on market trends and what sectors you're most excited about. If you're open to it, I'd love to invite you on for a part 2 sometime in the next several months, where we can discuss using data science and investing in venture and getting into portfolio company talent management, which are 2 really important topics that we didn't have time to touch on today because we were having so much fun talking about the first topic we dived into. But I'd love to have you back on if you want to.
Yeah, I'd love to get your 2 cents on the talent management side in particular, just given what you do. You probably have really good perspective, and I'm sure you've got great clients that are, acting as kind of a good petri dish for you to kind of think about the issues in the current environment.
Well, I'll let you decide if I have good perspectives, but I will promise you I have lots of opinions. So
Good.
I can share those. Well, Mark, thank you so much for joining us today. This was a blast.
Absolutely. Have a good rest of your day.
And for everybody tuning in, thank you so much for joining us. We appreciate you being part of our community. If you know anybody that you feel like would be a good guest on the show, I would appreciate an intro. And if you tuning in and you're a partner at a VC and maybe you feel like you have valuable insight, but you haven't done a podcast before, don't let that stop you. It's very conversational. We run these shows and it's a lot of fun. And the goal is, after a couple minutes of recording, you forget that you're even on a podcast. We're just having a good conversation. So if you like what you're hearing on this show, please also feel free to leave us a review on Apple Podcasts so we can spread the words. But anyways, I hope everyone has a great week ahead, and we will see you next time. Take care.